Welcome to Fear and Greed, the week ahead. I'm Sean Aylmer, and as always, I'm joined by economist Stephen Koukoulas. You'll find him at thekouk.com, TheKouk, thekouk.com, and on X using the handle thekouk. Stephen, good morning.
Good morning and happy new financial year. We're kicking off 24-25. Hooray.
Well, let's hope that our superannuation returns this year are just as good as our superannuation returns last year, because it was a pretty good year, 2024.
They were pretty good. I'd take that today. Yep.
Yeah, totally. Bumper week in terms of economic data, which is appropriate for the new financial year. But before we jump into it, those monthly CPI figures last week, fly in the ointment?
Look, we do want, and certainly the RBA wants to see inflation falling more rapidly to their 2 to 3% inflation target. So they did come in at 4% year on year for the month of May. Higher than market expectations. But when we sort of dissect the numbers, it was the usual suspects contributing to that high result: petrol, rent, tobacco prices, insurance. And this time we had the extra little addition from holiday travel. So probably the boomers using their great returns on their super to sort of jump on a cruise and on an airline. So look, it was higher than everyone would like. But as the RBA Deputy Governor said in a speech last week, we look at more than just 1 month of number. We look at a whole range of numbers. And between now and the next RBA meeting in early August, there's a lot more data to come, including the mega important June quarter inflation numbers.
Maybe hindsight's 2020, but even when it was happening last week, I kind of got this feeling that on one number, there was almost an overreaction in markets.
Yeah. And I think markets tend to overshoot. You and I have been around long enough to see markets spiking higher and spiking lower, and then they return to normal. And already in the couple of days after that inflation number, we've seen your bond yields come back down a bit. They're still pricing in a probability of a rate hike, don't get me wrong, but some of that exaggerated reaction to it has sort of dissipated somewhat, because of course last week we also saw things like job vacancies. So the all-important labour market indicator tracking down, it's down 26% over the last 2 years, which is a pretty chunky fall, and feeds into this narrative that the slow economy is well and truly impacting the labour market, and the unemployment rate, which has already gone from 3.5% to around about 4%, is probably going to increase further. And I think that's, again, what the Deputy Governor was alluding to. So what is it, in about a couple of weeks we get the next labour force number, and if that shows unemployment ticking up again, that sort of should be accounted to that inflation quirk, that little blip that we saw.
Plenty of data out this week to mull over. Retail sales, Stephen, what do you expect? We've had a very, very soggy consumer.
Yeah, the soggy consumer. Again, last week we had the consumer sentiment numbers, which track into the month of June. These are for May retail sales, but consumer sentiment's been crook for a couple of years. It's been occasionally up and occasionally down, but really the trend is very poor. So expectations are for a broadly flat result in dollar terms. These are not the real numbers, these are dollar terms. So retail sales still flat. Us consumers are reacting to cost of living, higher mortgages, higher rents. And so we're sort of trimming our expenditure, particularly on discretionary items. So a lot of the small retailers are going to be under a fair bit of pressure. But again, confirming the sogginess has continued in the economy into the June quarter.
Building approval figures are also out this week.
Sean, I'm wishing and a hoping and a praying that we get an increase in building approvals. They've been really weak for the last year or so. They've been tracking at their lowest level in 10 or 11 years. And look, it's really difficult to forecast the monthly result, because all it takes is for one, multi-unit high-rise tower to be approved for there to be a big spike and a big correction lower. We're hoping that they pick up, because, again, the issue of housing, which will take many years to fix, does need new dwellings to be built. And so we're hoping that we get a +5 or something like that as start of this long process to recovery in new housing construction.
I must say, in my time watching the economy, which, alas, I measure in decades, just like you do, I've never seen housing such a critical part of the economy for many, many reasons, from inflation to people having somewhere to live.
Yeah.
Through to population growth, all that. It just, housing right now seems more important than it ever has in my time.
I think I would agree with you, and I've been around approximately the same amount of time as you. Look at my grey hair, but yes, I think it is, and it's because that it's coincided with this broader cost of living issue that we were talking about previously, that I think the fact that house prices are still going up in most cities, the rental market's extremely tight, and that tends to impact lower income earners who tend to rent rather than high income earners who tend to buy. That squeeze and that inequality, I suppose you could call it, from the housing cycle, house prices high, rents being high, is something that's sort of just focusing the attention of many people and thinking, well, gee, first of all, it's very unfair. And second, it's really bad for society. And three, it's bad for the economy to have this sort of problem occurring in such an important part of the economy.
Just staying in construction, kind of house prices. We've got the full year.
As we just mentioned, going up. The CoreLogic numbers will show that house prices up about 0.7% in the month of June. We know that from their daily data. But again, a massive divergence from the strong to the weak. Perth will be up about 23% annually. Wow. Adelaide, Brisbane up 15%, give or take. Whereas Melbourne, flat to slightly down. We've got Darwin for those folks there, Hobart, Canberra also pretty weak, and Sydney sort of in the middle. So house prices on a national basis still going up.
And what about, a couple of other job ads will be an interesting one, given the issue about the labour market.
Job ads, yep, fascinating to see what happens to them. As I said, with the job vacancy series, which is a slightly different series, although if you had a Venn diagram, there's a big overlap, that they were weaker. So again, we're waiting to see whether job ads are continuing to track lower. And things like the international trade balance, really important. The net export side of the economy is one part that tends not to be covered up. As I said, we focus on housing and retail spending, but net exports can add or detract from economic growth. So expecting another decent international trade surplus on goods. So about $6 or $7 billion for the month. The iron ore exports are booming, even though the price has come down a bit.
Stephen, enjoy your week.
Thanks, Sean.
That was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on X using the handle The Kook. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.